This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Starting today's show is K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. They discuss the domestic and international conditions of the grain market for wheat, corn, soybeans, sorghum, and cotton. Guy and Dan keep the show going by continuing their conversation about grain market conditions and logistics of the Panama Canal and Mississippi River. K-State meteorologist Chip Redmond concludes today's show with a weather update. Kansans can expect continued above-average temperatures with a chance of a storm or two before Christmas. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. However, this week we are joined by K-State grain economist Dan O'Brien and the senior economist with the International Grain Program, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you.
Last week, this WASDE report did come out, and so wanting to talk about it today on the international and domestic side, and first, talking about the commodity of wheat.
The wheat supply-demand balance sheet for the United States, the domestic balance sheet did have a minor change. The USDA did raise the wheat export number by 25 million bushels. It had been at a 50-year low at 700 million bushels, but we did come in and see some changes. I believe soft red winter wheat, probably the main beneficiary of that. And we've seen some sales of late in that. So that was positive. Still, you're looking at a ending stocks number because the exports were raised. That was shaved down by that same 25 million down to 659 million bushels. And the stocks to use numbers were now adjusted down to 35%. Of course, that compares to 2 years ago at about 37% and last year at about 31%. So we're somewhere in the middle on the high side, if nothing else. Domestic issue right now that people are thinking about probably is how the winter wheat crop that's been seeded here in the United States will hold up, and we're receiving moisture in western Kansas, so that's a positive. We don't have a lot of other changes on the domestic side. Really, we've just been, I think a polite word is languishing export wise, and that's due to international competition, currency issues coming into play, and on the overall international numbers that there were for world wheat production, Australian wheat was raised for the 23-24 marketing year about 1 million metric tons. Canada raised 1 million metric tons as well. So not a lot of change there. Guy, do you want to have any comments on the world wheat market that you see?
Yeah, they did raise some individual estimates, but year on year, world wheat production will be about 783 million metric tons, which is actually off about 6 million metric tons from a previous year. But it was up slightly from last month's November's estimates on that. However, consumption is expected to be up. It's up about 7 million metric tons, about 635 million metric tons. So you would sort of expect that to be a bit bullish with supplies down and demand up. But exports are off probably 13 million metric tons, and I think that's reflective of there's a lot of wheat in the smaller producing countries around the world. I also think with the higher relative prices of wheat internationally, we're starting to see those higher prices ration some demand on that. And ending stocks were down there as well, as demand was up a bit. Ending stocks still pretty comfortable at 258 million metric tons on that. But it's, I guess, nothing new on that. We're sort of experiencing that in the U.S. being the residual store of commodities. Our exports have just been exceptionally slow.
If I can add in on that, the stocks to use number, again, yes, we have the world ending stocks for wheat at 258 million. If you take the world minus China, you're down to 194. That 194 is the lowest and continues to move lower year by year, the lowest since 2007, 2008. So I know maybe it's a contrary opinion, but I think the world very, very focused on wheat that's being pushed out the door out of the Black Sea, two primary Black Sea region countries, and their currencies are cheaper than the United States. And we're just, to me, I understand why we're doing what we're doing right now in the wheat market, but we're really vulnerable, I think, to any type of shortfall that would happen either because of weather or geopolitical issues coming out of the Black Sea region. And we're comfortable being tightened down, and you're tightening that spring to where somewhere out there a shortfall would cause a significant market reaction to the high side. What are your thoughts, Guy?
Yeah, we're running things pretty tight, not only in wheat, but particularly across the board, specifically in soybeans and even historically in corn. And I remain a bit optimistic we're going to see some of that demand start to come to town a little later than usual. But look, just in the last 10 days, we've seen China come in and buy nearly 2 million tons of soft red winter wheat. Bit disappointed they weren't buying hard red winter wheat, but China's cheapest wheat buyers, and your soft red winter was pretty cheap. So that's a good signal, and I think they're going to come to the U.S. probably the last part of the year since we're the residual store supplier of those grains, and they're starting to come to town and buy. So it keeps me cautiously optimistic for wheat particularly, but across all those commodities.
And what are we seeing on the corn side of this?
The corn supply-demand balance sheet domestically also had a bit of an increase in terms of exports, raised 25 million also there, up to 2.1 billion bushels, and out of total use of 14.49, ending stocks shaved down by that same amount to about 3.1 billion bushels. And again, the issue all along, the reason for our relative pessimism for corn prices when compared to where we have been in the last couple of years is that that ending stocks number is still projected to be well over 2 billion bushels. Stocks to use, 14.7% stocks to use, and that compares to 9.2 and 9.9% the last 2 years. Prices, $4.85 projected for this marketing year, again, running from September of 23 to August of 24, and that's down from $6 and $6.54 the last 2 years. So that's basically where higher stocks following a 15.2 billion bushel crop in this year will come into play. I would say there's still the chance for that production number to change. We come January the 12th, we'll have the final U.S. crop production number, although they say it's the final, it can still change out in the future if they discover they're off. So there's the potential for volatility coming into the market around that set of January reports. And Guy, to kind of give a springboard off into your side on the international side, that we still have a lot of uncertainty about Brazilian corn production. Again, problems they've had on the soybean crop and dry weather that's hit some of those up and down weather. Some good forecasts, some poor, have the potential to impact that second crop, a safrinha crop for Brazil, and that would change a lot of things.
On the global side of things, we've seen record world corn production this year at 1,220 million metric tons. That's a record production. A big driver of that is Brazil, as you said. They continue to increase their corn acres, and they're expected this year to export just under 56 million metric tons compared to last year at just 45 million metric tons. And that's as they extend that export season down there in Brazil, we just haven't seen the volume of buyers come into the market, particularly for corn, similar to wheat on that. That said, China now has emerged as the biggest wheat buyer as well as the corn buyer, and we've seen them come in the market in the last few days there as well. Looking on down through the global supply-demand relationships, exports are up this year just under 200 million metric tons. That's up about 19 million tons from last year. So it's good to see that, and it's a bit of a sign of still strong livestock feed demand and coming from still a fairly strong livestock sector there. That said, our ending stocks are up. They're up a bit, about 15 million metric tons from a year ago, a bit more comfortable, and I think that helps to explain why we just haven't seen corn as strong as we would like to have. We're just getting, even though it's tight, we're a bit more comfortable, and that's the way we're moving. So everybody's relaxed a bit and doesn't feel that sense of urgency.
We've received reports in the last few days tightening ethanol stocks here in the United States. Not just ethanol, but biodiesel policies down in Brazil being discussed, if anything, expanding. So I think anymore, we have livestock feeding, we have crush, and coming out of crush for soybeans, we're seeing more of an energy component to the oilseed sector to match to at least match what we've seen in terms of ethanol development in the United States. So, Guy, as you and I go forward, and Shelby, as we talk about this stuff, I think all that much more, it behooves us to really, really be aware of these ongoing trends and actually some of the international policies on the bioenergy side. Any thoughts, Guy?
Yeah, look, we've seen ethanol prices come down and their margins narrow up they were quite healthy last month when we were discussing this, Dan. The margins come down, but they're still positive on that. And that's sort of following crude oil prices have come down to below $70 a barrel in the last few weeks, which is sort of driving that. Just a report out this week from the IEA indicating that demand for oil has actually dropped off, particularly in this last quarter of the year, and that's being reflected in gasoline prices at the pump as well as crude oil prices, and that flows through to that ethanol market.
Since we're talking feed grains, can I mention something real quickly on grain sorghum? Last week, we had a strong ethanol export run. Saw grain sorghum exports in the U.S. jump up to 13.4 million bushels. A lot of times they'll hop around 2-3 million bushels in any 1 year in terms of actual shipments. But then they'll kind of aggregate sales and in 1 week jump to 10, jump to 12. Well, this 13.4, tremendous run. Guy, a lot of that's going straight to China, and I know you have a China background from your work overseas, and that's going into some domestic beverage markets, isn't it?
Yes. That even though our world production of sorghum's up by about 4.5 million metric tons internationally, we've seen exports up about 2 million metric tons, and up U.S. exports of sorghum are twice what they're forecast to be last year. And again, that's being driven by China into that Baijiu market. So that's probably the most bullish complex out there is the sorghum. Even though we've had a dry year in Kansas, it looks good for the coming year.
We're going to cut to a short break right now on Agriculture Today, but when we come back, we'll continue our conversation with Guy Allen and Dan O'Brien. You're tuned back into Agriculture Today, and we continue our conversation with K-State grain economist Dan O'Brien and senior economist at the International Grain Program, Guy Allen. Dan, Guy, continuing our conversation now with that recent WASDE report coming out and talking about soybeans.
Really, USDA made no changes in the U.S. domestic supply-demand balance sheet. Now that those changes may be coming in the January 12th set of reports, but the overall picture is that we're sitting at 245 million bushels of ending stocks projected, and that follows from the higher levels of previous 2 years. Stocks to use this year at 5.85, 5.86% stocks to use. The last couple of years, we were at 6.1, 6.2%. So if anything, we're really in a domestic trend where we're sideways to lower in terms of relative stocks. And we've seen the growth in domestic crush from 2 years ago, 2.204 to 2.212, and then this year up to 2.3. As we mentioned earlier, we're seeing the growth of domestic fuel usage, biodiesel, renewable diesel, whichever. And you see that in the crush numbers. The biofuel numbers have been growing the last couple of years as well. So most of the action or excitement in the soybean market is actually on your national side. Guy, would you want to address that?
Looking at the total oilseed complex, we saw global production down slightly to about 661 million metric tons. In contrast, we actually saw USDA increase world soybean production. It was slightly lower from last month, but it came in at 399, just shy of 400. But that's up about 24 million metric tons from last year, which is a fairly significant increase in soybeans, though total oil seed production was a bit tighter on that. That said, on the trade situation, trade in soybeans is going to be fairly steady, about 170 million metric tons. Ending stocks up just slightly, about 10 million tons to 114. So we're comfortable on soybeans, but it's probably the tightest of the commodities out there. Again, we're seeing that shift continue to happen in the U.S. as the biodiesel and the biofuel situation continues to drive that strong demand for oil. And that's, in the longer term, going to impact our import mix of whole soybeans versus oil and meal. We're going to consume a lot of that oil domestically. I'd even suggest the U.S. will become a net importer of vegetable oil in the next year or two, and we'll be exporting more meal. And given sort of what's happening in Argentina, with their changes in government down there and their approaches. Argentina economy in the past has been set to do the crush in Argentina, so they're the big exporter of the products, oil and meal rather than the whole oil seed. If they take those export taxes off, which has been rumored, they could become a significant exporter of whole seed soybeans and not so much the product. But that's yet to be seen, but that's sort of the talk in the trade here recently.
I would add that the latest projection by the USDA was 161 million metric tons for soybeans in Brazil. From in-country sources over the last month or so, you've seen projections markedly lower than that at times. And then when a forecast for rain comes on, then they jump back up, et cetera. So I guess the point, Guy, is that we're just in a very uncertain time in terms of what will actually come out of Brazil. And if there's one thing that would come in and shock the commodity markets, it would be that the dry areas that, again, you look at the maps for much of Brazil, it's dry. It really is. So they still, I guess, based on their success in the recent years in production, they're expecting, well, it'll all work out in the end and they'll get a great crop. But the moisture's not there yet to make that happen. So I guess I just would identify that in my own thinking as a potential volatility causing factor in these markets. And where that could go, if you raise soybean prices because of problems in Brazil, then you're coming into spring, you're affecting soybean versus corn new crop prices, and it affects planting choices, acreage choices in the U.S. heading off into March, April, May. So that's something that I'm watching. Anyway.
Brazil's going to have a record export this year of 101 million metric tons, up about 23 million metric tons from last year's big crop. So and that export program has extended well beyond what it seasonally does, and we just haven't seen that shift back to the U.S. as we usually do in September as our new crop comes off. But that's starting to change.
And our last commodity to talk about, just looking at it domestically, is cotton before we talk about some issues that you're seeing internationally here, Guy. And so, Dan, what are we seeing with cotton?
Most noticeable thing with cotton to me is the decline in prices over the last three marketing years. Here in the 21-22 marketing year, we were at 91 cents per pound for upland cotton. Then last year we were at 84.8 cents. Now we're projected to be 77 cents. So combination of U.S. and domestic factors are leading to lower cotton prices. And I'm sure if you look at 91 cents versus 77, you're tightening margins. And I'm thinking, Guy, that those type of changes affect profitability. And I think we'll be waiting to see what happens in the U.S. with regard to acreage with lower prices as we head off into 2024.
And Guy, earlier you mentioned a little bit of things happening in Argentina, so could you share a little bit more about that?
Yeah, I want to talk a bit about the foreign exchange, which that sort of drives all commodities, particularly export demand. We've seen the U.S. dollar come off about 5 points in the last couple weeks, last 10 days. That's on the back of the Fed sort of indicating they're not going to raise interest rates in the near future. But just this week, we saw Argentina move their exchange rate from 400 pesos to the U.S. dollar to 800 as the new president, Milei, took office. He's also making significant structural changes in the government. I think he's only appointed 9 ministers out of 18, so a significant cut in the government overhead. There's discussion, as I mentioned earlier, that they're going to remove the export tax, and we'll see how successful he is in making those changes. But a lot happening there in Argentina nearby as we see that change in government that's going to have a significant impact on trade flows and prices.
And then also wanting to talk about some logistical things, and one of those being involving the Panama Canal.
Yes, a lot of discussion and focus the last few months on the Panama Canal. It's been a bit dry down there, and the big lake, which sort of feeds that water system where they lock it through the isthmus down there, is low. So they've restricted drafts. A month or so ago, they started restricting the number that transit the canal. That's raised prices. And last month, they've put in slots. So now you have to go out and book and buy in a slot. And they're declining. And there's actually a secondary market that's evolved from that. So that's significantly increasing the price of any goods or commodities that have to transit that canal. Now, bringing that back to the U.S. from a grain commodities point of view, it hasn't had a major impact. It sort of changes the flow, but here domestically, grain commodity either moves off the West Coast, off the PNW, or it moves out of the U.S. Gulf. And we can change that flow very easily and what's been happening, the basis values at the Gulf have got fairly cheap relative to the PNW. So we're seeing, rather than have to transit the canal, We just move our export flows from the western states to the PNW rather than to the center Gulf. So it's having an impact, but not as much as you might seem. But it is quite bullish, western basis values versus eastern Corn Belt basis values.
Something else on the water-related front, the Mississippi River.
Yeah, the Mississippi River is running low again this year, not quite as low as last year, but do have draft restrictions, I think, at 10 or 10 and a half feet, which last year we saw barge freight rates well above 1,500% of tariff during gut slot harvest. This year, they were running about 600, and then about the middle of October, they dropped off pretty quickly. One was just the export demand wasn't showing up. Secondly, and probably the bigger issue is growers, the prices had got low enough, growers just quit selling new crop corn. And we saw that in a 2-day period in the barge freight market, where barge freight just went from 600 to about 300% of tariff. And it's going to be interesting to see the December stocks report, and I'd suggest we're going to see a lot more farmer-owned inventory here in the next stock report on that. So it's an issue. Not as big an issue as it was last year, but it is a concern. Keep in mind about 75% of the water supply going down the lower Miss comes off the Ohio River. So we need some good rains in the eastern Corn Belt to really recharge that. It's also impacting the cost of fertilizers and other commodities coming back upriver for fall application and spring application of fertilizer, fuel, and those other commodities that move upriver on that logistics.
And what I would wonder, here you talk about the river system and barge transportation of grain down and inputs back up, all affected Panama Canal. And in looking at the latest USDA Ag Transportation Report, we don't see a major jump yet, although a little bit of an increase in rail transportation costs, particularly for if we can't go down to the Gulf so well for these ag products. The next place we would go is probably up either through the St. Lawrence Seaway or mainly through the Pacific Northwest. And again, if those rates are jumping, at least with the indicators I'm seeing, I don't see it explosively jumping. But I would wonder about that is happening all that much worse, particularly as the Panama Canal issue prolongs itself. And there doesn't seem to be an end in sight.
Well, one thing, and I should have mentioned this when we were talking about the Panama Canal, but we did see the dry bulk freight index double last week, at the end of last week, on the demand for more demand from dry bulk. That was probably coming more from coal and iron ore than grain itself. They all work together to drive those dry bulk vessel values. But last week, it essentially doubled in value in about 3 days. So
wow.
Particularly if you're reducing draft or if you're having to take alternative routes and increasing the distance, you need more capacity to basically fill that demand for that supply chain. It's come off a little bit in the last day, but that jump was rather, I guess, not surprising, but it happened very, very quickly.
That was K-State grain economist Dan O'Brien and the senior economist at the International Grain Program, Guy Allen. We're cutting to a short break now, but we'll be back with more ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update. And as always, we're joined by K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, once again, we've continued with some warmer temperatures.
Yeah, we've been pretty remarkably warm. Granted, the last few days have cooled off a little bit with the cloud cover and lack of solar heating, but we were really warm over the last week. In fact, the 7th, we saw 70s and even some 80s in parts of western Kansas. And that was actually the most warm compared to normal we've been. So we were looking at 20 to 30 degrees widespread across the state above normal. And that's the highest departure from normal for the state as a whole for the year. And you think about those hundreds that we saw in the summer and how drastically warm that was compared to normal. It's still pale in comparison to average temperatures are so cool this time of year when we have a warm-up that substantially. We're talking widespread 20 to almost 30 degrees above normal. That was a big, big warm-up. That was obviously short-lived with the cold front afterwards, but we continue to see mild conditions. Right now, Kansas is averaging a couple degrees above normal for December, and we need a pretty substantial cold spell to offset this warmth later in the month to get near normal by the end of the month.
And as we're talking right now, is there a part of the state that's seeing some precipitation?
Yeah, a big part of the state. Western Kansas has hit the it's a gold mine for precipitation with a really slow evolving system over the last 3 days. Starting to kick out now as this is aired. But snow, they had some rain, they had some freezing rain, a little mishmash of everything. But in the grand scheme of things, we're talking moisture totals exceeding an inch to an inch and a half, which is really needed for that area that was kind of starting to be considered in a drought status again for what was our wettest part of the state for most of the year, is now returned to our wettest part of our state because they typically average around a tenth of an inch of rain a week. And so inch to an inch and a half is enough precipitation for almost 10 weeks when we look at Kansas entering the driest time of the year.
Sounds like some big changes for western Kansas. And as we look forward, are we going to be seeing changes in our temperature for next week?
Yeah, temperature is going to be pretty consistent. We're expecting a lot of mild air, warmer than normal temperatures to persist across most of the northern North America. And that's in part due to a really prominent jet across the Pacific. We've got the El Nino influenced jet that's enhanced even further by a really cold, substantial polar vortex lobe in East Asia that has resulted in really cold temperatures for them. But those two air masses contrasting have basically created a really prominent jet stream across most of the Pacific. And out ahead of that, east of that jet stream, we're funneling this moist tropical air northward into the Americas. And that's expected to stay that way for the next several weeks with much above normal temperatures expected and higher moisture content in the air. Doesn't mean we'll necessarily see more precipitation, but it looks like there'll be another storm system that enters part of that extended jet that'll enter the western United States here in the next 4 to 5 days. That'll likely evolve and translate eastward, and how much precipitation across the plains is kind of yet to be determined based upon track, but above normal probability for precipitation is expected as we go into Christmas. Unfortunately, with that warmer air, I just don't see any widespread big snow events, but it looks like there'll be more moisture in the offing. Chip,
as we look forward into 2024, can we be expecting to see a pattern change?
Yeah, so with this extended jet stream, really strong jet stream across the Pacific, it tends to buckle and break down after a period of time. What that will do is create a wave breaking to our west that should allow some of that cold air to finally funnel southward into the United States. But right now, time frame is after the first of the year. We're thinking early January at some point. And I would say that there are several things that right now are pointing towards January is going to turn colder, and we might not have as mild of a finish, or at least middle of winter, as we had to start.
Chip, as always, I appreciate you taking the time to join us and give us our weather update.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. You can keep up to date with the weather on the Mesonet, which you can find at mesonet.ksu.edu. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.